Go back to the original. Okay, all right, can.
Okay, good morning, everyone. Thank you to tuning in to today's corporate briefing session. My name is Kenneth, analyst from Malacca Securities, and I'm the moderator for this session. We have with us today Ms. Ng Lai Ping, Group Chief Financial Controller of OSK Holdings Berhad. Just a quick introduction. OSK Holdings Berhad started off since 1963 as a small-scale stockbroking firm and has now evolved into a well-diversified mini conglomerate. At present, OSK operates 5 business segments, namely financial services, property development, construction, industries, and hospitality. OSK also holds 10.22% equity stake in RHB Bank Berhad following the merger of OSK Investment Bank and RHB Investment Bank. The aforementioned strategic investment allows OSK to reap benefits through long-term dividend income and subsequently translate to decent dividend yields over the years. With the end of the introduction, I will hand over to you now, Lai Ping.
Okay, thank you, Kenneth. Thank you for participating in this live stream. Okay, I will proceed with the briefing on OSK Group. As we speak today, actually our stake in RHB has increased to 10.24% because we have taken the option of the dividend reinvestment plan, which was the settlement was on the 15th May. So as it is today, as we speak, we have increased our stake in RHB Bank to 10.24. So as I'll continue with the presentation. So my presentation will cover 4 areas. I will not touch so much on the last part, but the critical one will be on our group financial performance, which is in the first agenda. And then we will go through our business updates that covers our core businesses. And also number 3 and number 4 will be our route to our sustainability blueprint and our ESG initiatives. Okay. As you are aware, OSK Group is a resultant of a merger of 3 listed companies, OSK Holdings Berhad, PJD Holdings Berhad, as well as OSK Property Holdings Berhad. This merger was carried out in 2015 and completed in 2016. Subsequent to the merger, the group has actually reorganized itself into 5 core businesses and supported by the supporting division like the finance, the group IT, group HR. So our 5 core businesses will be financial services and property. And actually, these are the 2 main core businesses that contributes, if you look at the bar chart below, close to about 90% of our profit before tax, as well as the top line in terms of our revenue, about 70% as well. And the rest of the division, like the construction, industry, and hospitality, contributes the balance. So if you look at the bar chart below, the contribution of PBT from the financial services is at about 65.8% of the total group profit. Out of this, about 50% of it will be our share of profit from RHB Bank. The balance is our own money lending business under our capital financing. I will go through the money lending business as well later on in my slides. Property forms the other major contributor to the group with a contribution of a top line about 57% and a bottom line about 30% in FY 2022. For information of our stakeholders, as well as probably some of you are our shareholders, we have just paid our 4-cent dividend on 12th May. That represents a total dividend for FY 2022 paid by OSK Group at 6 cents. Yeah. All right, I'll move on. So in FY 2022, I'm sorry I cannot disclose anything after this because we have yet to announce our first quarter. Our announcement for the first quarter will be coming up on the 26th May. So what on the financial figures, I can only present to you what we have announced to the public as well as to the Bursa. So we recorded a revenue of 1.3 billion in FY 2022. That is an increase from FY 2021. with a total recorded profit before tax of 488 million, and our core profit, which is mainly coming from the normal usual operation, is about 481. Yeah, and that gives us earnings per share about 20.72 cents. And that is actually about less than 5 times PE compared to our share price as we close in FY 2022. All right. Over the 5 years, we from 2018 to 2022, you can see that the contribution from the two colored bars, the brown as well as the blue, which is our financial services and the property. You can see that these are the major contributor over the last 5 years. And in FY 2022, we don't, or even 2020 as well as 2021, we do not have any exceptional gain compared to what you can see in 2018. We have a 93.4 million, the top gray portion of this chart, exceptional gain recorded. If we were to exclude the exceptional gain in 2018, you can see that actually the growth of the company has been quite good. Within the 5 years, I'll go into the next chart. Yeah, we recorded a compounded annual growth rate about 14%. So mainly still coming from our property and the financial services division. I think one point to note here is actually in FY 2022, it is the first time that our hospitality division, which is in a very light gray here, recorded is just a break even compared to 2021, about 16%. 16% losses, 16 million losses, as well as the prior year about 20 million losses. So this is a vast improvement for our hospitality division, which showed a turnaround from a loss making of 15 to 20 million to just a break even. We were happy with the results, and actually the rebranding of our two hotel destination, one which is the resort in Damai Laut to DoubleTree by Hilton, as well as the hotel in JB to Holiday Inn Express, has actually benefited the group with GOP. GOP recorded immediately upon the conversion or reopening of the hotels. All right, I'll move on. Okay, so next on our financial position as at 31st December 2022, this is our balance sheet effectively. We have a total assets of 9.7 billion, a shareholders fund of 5.7 billion. But with the amount of assets that we have and the shareholders fund, and our gearing remains low at 0.16%. And if we were to include even the capital financing portfolio, our gearing is only about 0.38. Taking into consideration the assets that we have on hand, that means that we don't take that much debts against our assets. And our total debts as it is now is about 3 billion. And out of the 3 billion, about 1.5 billion of it is actually for our money lending business, which we on lend to our customers. So that gave us a net gearing of 0.16. And our total cash on hand is actually about 700 million. And we do have unutilized facilities of about 400 million. That gives us a headroom for expansion and for working capital without having a financial stress on the group. Our total net assets per share is about 275. As of today, we are trading at about 1 ringgit. And we have a net debt of 2.3 out. We manage our debts in a way that we do not have any immediate stress on our balance sheet in terms of loan repayment. And the portfolio of our debts, the average maturity profile now is actually about 4.3 years. We don't have immediate term loan or long-term loan that is due within the next 2 years, other than those revolving credit facilities that we obtain for our capital financing businesses, which is also lending on the short term to our borrowers. Okay, next I'll move on to the shareholders fund. This is a snapshot of the shareholders fund from 2016 at the point of merger to now. You can see that we have grown our shareholders fund from 4.3 billion to now 5.6 billion. This is also taking into consideration that we declare dividend about 4 to 6 cents every year without fail since the merger. And the total assets have grown from 7.7 billion to 9.6 billion. And substantially, you can see at the pie chart on the bottom right, the assets stays in the property development as well as our financial services division. We do have a substantial portion, about 15% in our property investment division as well. All right, I'll move on. This is our debt maturity profile that I mentioned. Other than about 1.3 billion, which is short term, the rest of our loans are actually more than 2 years. They give us an opportunity to look at our debt portfolio or debt profile to ensure that we have headrooms for growth, as well as we are not under cease in terms of loan repayment and sufficient, and the debt portfolio, the debt profile is actually being arranged to match the businesses that we lend to, that the cash flow from the businesses that we lend to as well, so that there won't be any mismatch where we will be under cease in terms of loan repayment. Okay, in the last year, in FY 2022, you'll be shocked to see that there's a net cash outflow of 288 million. But I would like to explain that this outflow of 288 million is as a resultant of our growth in our capital financing business. Last year itself, our loan growth in the capital financing businesses increased by another 418 million. So that 418 million is actually classified as our operating cash flow outflow, because it is our capital financing is our usual business. So that cash outflow, i.e. the disbursement to the borrowers, are actually reflected in the operating activities. If we were to exclude that disbursement of 418 million, we actually generate a positive cash flow of 130 million for the group, and that has resulted in a cash and cash equivalent as we close the year end at 713 million. All right, I'll go into the group business updates. So I'll touch on our capital financing and investment in RHB. If you look at the chart on the right-hand side, that's our capital financing businesses, which has grown with a loan portfolio of about close to 600 million in 2018, and we closed the year end at 1.4 billion. And you can see that the chart has actually a few more colors. In 2021, we have actually expanded into the capital financing in Australia. And in 2022, we have actually increased our exposure into the Sharia capital, which is the Islamic financing. So if you look at the Australia part, Australian loan portfolio actually contributes about, the Australian one is a 6%. Australian loan portfolio actually contributes about 6% of our total loan portfolio, whereas the 23% is actually our Sharia capital, which mainly involved in the civil servant financing. So the civil servant financing has grown substantially over the last 1 year, 1.5 years since we embarked into this new product line of ours. And Australia also has been growing steadily, but not as aggressive as what we wanted, because in terms of risk management, we would not want to be exposed to credit risk, which in an area where we are not familiar with. So the team has been studying all the credit proposal carefully before we disburse. So that's why you can see that Australia, though we have been there for the last 2 years, but we are carefully expanding Whereas the civil servant financing, we will be more aggressive in this because the credit assessment is more visible, and we are actually targeting all the civil servants where the deduction of the loan repayment is direct from their salaries. So the group will continue to grow the businesses under the capital financing with the local Malaysia portfolio as well as Australia. One point to note is actually all our financing other than the civil servant finance are actually with security, including those in Australia. We do not give out clean loan over here, and our security cover is at least 2 times. So the other point is actually to look at is our non-performing loans, which is actually managed at a manageable level. We closed FY22 with only 1% NPL, though there's a slight spike in FY 2021, but most of this NPL has been rectified now. That's why you can see that the NPL is only 1%. We don't have any impairment because, as mentioned, all our loans are with security covers. So if there is any loan default, the security cover would be more than enough to cover the loan outstanding. I'll move on. So this is the performance by the capital financing. In the last year, we recorded a revenue of 115 million and a profit of 63 million. Okay, RHB. RHB will continue to be our long-term strategic investment. As mentioned just now, our stake in RHB now is actually 10.24% after taking in the dividend reinvestment plan on 15 May. Okay. If you look at what RHB have done over the last few years, they have been issuing or dividend in lieu of a reinvestment plan. So over the years in 2021 and 2022, we have actually opted for the dividend reinvestment plan. That's why our stake in RHB has crept up a bit, and RHB continued to provide us with a bedrock dividend for our dividend to our shareholders. So despite the cash received, which is minimal in 2021, the group has used its own cash flow for our dividend to our own shareholders, and I think RHB will continue to with its dividend policy for in the coming years. I think they will be looking at 20-30% dividend payout over the years. All right. Okay, on the property development and property investment. Yeah, this photo that you see here is actually our township development in Seremban, Iringan Bayu. And in FY 2022, the property development Malaysia recorded a 722 million turnover and PBT about 141 million. Just to note here, the turnover from our Australian property development is not recorded in the turnover because Australia is actually our joint venture. So we just take into consideration the share of profit from our Australian businesses. Our status of sales, unbilled sales, and unsold GDV. As we close the year end, we have a total sales of 947 million. That includes Australia, coming from Australia, about 110, and the local business here about 830 million. Okay, our unbilled sales stood at 1.045 billion, with 34 million coming from Australia and 1 billion the local. The Australia unbilled sales here is actually representing our stake in the project. The Australia project is actually a joint venture with EPF. And we have unsold GDV of about 915 million. This unsold GDV includes mostly the ongoing projects. That means projects that we have launched and is still under construction. Our completed unsold GDV stood at only about 28 million. Actually, we are one of the property developers with the lowest unsold GDV or unsold completed GDV, meaning to say most of the projects that we have launched, we put into the market, are fully sold before before the handover, before the completion of the project, which is something that we are very proud of, and a strategy that we have been adopting over the past 6-7 years. So if you look at the record from 2018 onwards, you can see that we do not have much unsold completed GDV, which is the light blue colored in the chart here, right? And that's the strategy that we have been adopting to ensure that to ensure that all our projects that is put into the market are fully sold, and we are comfortable that the sales momentum will carry on before we launch the next tower or next phase of the project. So these are the projects that we have in the market. We have 2 township projects, which is in the northern side, Kedah, Sungai Petani. This township is actually started off with 4,000 over acres. We are now left with about 700 acres. It has been going on for the last 20-25 years. We did landed housing and also commercial properties in this. If you have a chance to visit Sungai Petani, you will not miss this Bandar Putrajaya. And the latest addition to this Bandar Putrajaya in terms of our investment property is actually a hypermarket, which we lease out to Lotus. And accordingly, we will make to understand that that is the most well-performing Lotus hypermarket in the northern side. So the other township that we have is actually in Negeri Sembilan, namely Iringan Bayu. This is a township comprising about 1,500 acres of land. We have developed substantially the phase 1 of this 1,500, which is about 800 acres. Is almost 70% developed, left with about 30% land under the phase 1 that is not developed yet. And the Iringan Bayu township is mainly landed housing, double story and single story. We have not started any commercial development in this township. We want to build up the community first before we put in our commercial assets or commercial products to the market. So we have launched about close to 3,000 units of houses in this Iringan Bayu, and I'm glad to report here that most of the products that we have put into the market are also fully sold. Then we have the rest of the product that we have in the portfolio now are actually high rises in Penang. This is a continuity of our Harbour Place development called Rubika. Rubika is a service apartment with estimated GDV about 137 million. And Rubika has just launched about 4 months ago, and we have a good take-up rate, about 30%. UCity is almost completed now in terms of construction progress. That is in Cheras. This was launched about 2 years ago, 2.5 years ago, and it's actually fully sold. What we are waiting now is to continue with the revenue recognition as and when the construction progresses. It's 100% sold, done and dusted. We have moved on to Shoria Park, which is in Puchong. We have Shoria Park. We have launched. My background is actually our advert for Shoria Park. We have launched the first phase called Mira. Mira is actually also 100% sold by now, because the balance, you can see that it's 99% take-up rate here. The balance is actually a couple of units of the affordable range under the Rumah Selangorku, which is priced about 250,000 for a 1-bed apartment. And subsequent to that, we have also launched our phase 2 called Anya. Anya is also 2 towers comprising about 900 units, and with a GDV of 300, close to 400 million. We have just launched Anya about 6 months ago, and the take-up rate is about 18%. We progressively launched Anya. We just put 1 tower into the market, and because when we reached 70% for Mira, we put Anya. So at that point in time, Anya and Mira is giving the purchaser two options. But with Mira now almost fully sold, we reckon that the progress for Anya would actually pick up in the coming months. The next project that we have in the Klang Valley is actually at Melawati, called Leah by the Hills. Leah by the Hills is actually a development, a low density development, 233 million GDV. We have launched that also about half a year ago. Take-up rate is about 13%. All right, that is all that we have in Malaysia, and the other projects that we have is actually in Melbourne, Australia. Okay, I'll just, before I go to Melbourne, Australia, I'll just touch on our land bank. We still have about 2,000 acres of land bank with estimated GDV of 16.2 billion. We will continue to look for land bank, definitely, as a developer for our sustainability of our businesses. So in year 2022, we actually acquired close to about 90 acres of land. These are adjacent to our existing township. There's about 39 acres in Iringan Bayu. This is just next to our first phase, with an estimated GDV of 175 million. And we also acquired another 50 acres in Sungai Petani, within the Bandar Amanjaya, with an estimated GDV about 230 million. So we will continue to look for land bank in Malaysia and as well as in Australia. So Australia, last year also we concluded the acquisition of land bank in Australia with 2 parcels of land. This one is with a office building on top. The land is measuring 7,800 square meter, which is very sizable in relative terms in Australia, with a net and the buildings has a net lettable area of about 11,600 square meter. So we will hold this for investment at the time, for the time being, and with the final intention to redevelopment in 5 to 7 years time, because we still have about 3 more parcels to go in our phase 1 of Australia. So in Melbourne, so we will keep this as an investment for the time being, with the rental income from the office building. All right, so our target launch for 2023 is about 1.3 billion. This excludes Australia. This is a breakdown of the launches. We will continue to launch in our township, which is in Seremban and Sungai Petani, as well as the pipeline projects for our Klang Valley will be our Shore Park Anya Tower B. As I mentioned just now, we've just put Tower A into the market. Now will be Tower B, and then there will be another phase in Melawati. As and when the sales reach 70%, that's always our guideline. Then we will put the second phase into the market for Melawati. Mori Park is actually in Shah Alam. We target to launch it in second half of this year. All right, so these are our pipeline launches, about 1.3 billion. Okay, I'll move on to Australia. As some of you may be aware, we have actually completed, these are actual photos of our first phase of the development called Melbourne Square in Melbourne, in South Bank, Melbourne. The 2 towers comprise of about 1,054 units of apartment with a retail podium and a childcare center. We have actually sold the retail podium and childcare center to external party in 2021. So this is no more owned by us. We still have about 100, slightly above 100 apartments available for sale in this phase 1. These are completed units. And out of that, 50% of the apartments has been leased out for a short-term lease, just to create additional cash flow in terms of rental income for us while waiting or while working on the sales. So for Melbourne team, the focus will be to sell the remaining completed units, either the empty ones or vacant ones, or those with the lease or short-term rental, right? This is a joint venture. This development in Melbourne is actually a joint venture with EPF. we own about 40.6% in the development. So actually, we equity account for the share of profit in this entity. All right, this is an interesting one. We have just recently launched this BLVD, which is actually short for Boulevard at Melbourne Square. This is our phase two, a single tower. Actually, it's confusing. This is the only tower that we're referring to, a single tower. This is the existing two towers, comprising about 644 units with an estimated GDV of Aussie dollar 650 million. So I think the percentage here is not correct. We have not started construction. The take-up rate, we have just put into the market in April 2022, but I must say that the interest and the amount that we have signed is very encouraging. So we'll be launching this in Kuala Lumpur at EQ Hotel from the 19th, which is this Friday, to 21st. If anyone of you are keen to invest in Australia, do drop by our launch in EQ Hotel Kuala Lumpur this weekend. We will be having our soft launch there. There will be a lot of sales personnel to attend to you for further information on the project. Okay, so more detail on the the new acquisition that we have in Melbourne. The MSQ that you see here, this is our existing project, which is on the bottom right. The new land that we acquire, which is about 7,800 square feet, is called QBP. QBP stands for Queensbridge Place, which is diagonally, just strategically located just opposite Crown Casino. Crown Casino is here. Actually, the whole Crown is very large. So it includes the Crown Casino as well as Crown Promenade, which is the hotel linked to the Crown Casino. And this is just diagonally opposite Crown Promenade and within a stone throw away from Crown Casino. This is Yarra River, and as you walk across or in front of Crown Casino and cross the Yarra River, you will actually reach the Flinders Station, which is the central train station in Melbourne that connects you to everywhere in the suburbs of Melbourne. So it's actually a very strategic location, the Queensbridge Place that we acquired, and that will be held for investment for the time being until we finish developing Melbourne Square. We will move on to redevelop this Queensbridge Place, right? Again, this acquisition was together with was done by the entity that we joint venture with DPF. So we will continue to own the 40.6% stake in this joint venture. So that is for our sustainability of business in Australia. I'll move on. This is some photos of the assets that we have acquired recently. The whole stretch from the blue all the way to the end of the road. And this actually have two frontage. This is the Queensbridge Road, and this is the City Road. The photo at the bottom is the City Road. So the asset actually have two frontage to a two busy road, Queensbridge Street, as well as the City Road. All right, on our property investment, actually the group have three property investment: Atria Shopping Gallery, Plaza OSK, where the corporate office is, as well as the Faber Towers, which we joint venture with a local partner. So the revenue from this three investment, we recorded about 30 million, mainly from the rental income, and profit before tax about 3 million. Right, these are our assets. Plaza OSK as well, Faber Towers. Plaza OSK is almost fully occupied. Of course, 60% is occupied by our group businesses, and the balance 40 is external tenants. Faber Towers, about 81% occupied. Faber Tower is with a retail podium. The retail podium is actually 100% occupied. And our Atria Shopping Gallery in Damansara Jaya, it is about 87% occupied with our key tenants, as you can see in these slides. All right, construction, I will not touch much on construction because the construction segment actually provides services only to our property development arm. They are our expert in terms of giving advice on the constructability, cost efficiency, and as well as to ensure that our all our projects are completed within time and cost. So and also the quality set by the property segment. So I think there's nothing much here to mention about construction, but over the years, the collaboration between our property and construction has given results. We have no projects that is delayed over the last 5 years. We hand over on time or very much ahead of time. And we achieved the QLASIC score, which is the quality score set by our property development arm, as well as acceptable by the investors or purchasers. And if you look at the table here, most of our projects are actually well above the average standard for the type of property that is in the market. All right. On the industries has actually bounced back compared to what we have experienced in 2020 and 2021. Of course, everyone knows that 2020 is a COVID year. 2021 is half affected by the COVID, and the other half is probably a slow reopening, and 2022 is back to the full swing. So our industry segment comprises of two businesses. One is the cables, which we manufacture power cable for household as well as for high voltage cables for industry or power cable use. All right. So there are different type of cables that we produce, and this is not a new business to us. We have been in this business for the past 20 over years, and it has actually grown substantially over the years. If you look at the chart here, last year we recorded about 257 million revenue on top of a 10 million profit, and this year we are poised to grow further for this with the expansion of our factory, as well as the increased demand from the utility company, as well as the increased activity in the country. So this will consistently give us in the past. Actually, we don't have it on the slide here. In the past years, this company has been recording about 15 to 20 million profit. They were affected by the COVID years in 2020 and 2021 as well. Especially in 2021, the profit margin of this group this segment was affected by the rising material price. But as of 2022, we see a stabilization in terms of the raw material prices, though it's at the elevated level, but it's manageable, much more manageable level compared to what we experienced in 2021. And 2022 is also, the profit is slightly affected also because we make some provisions in terms of the late delivery, because we were affected by the disruption in the production as well as raw materials. So there was some late delivery penalty imposed on us, which we have actually adequately provided for. Nevertheless, we actually appealing to the customer to waive the late delivery charges. So we will manage this, and if there's any outcome, we will announce it in our quarterly announcements. All right, I'll move on to IBS. Actually, we are a producer of hollow core wall. Again, this have done very well in 2022. The material prices here is very much managed because other than sand and granites, the other material is cement or concrete. which we are able to manage this quite well despite the increase in the raw material price. So this we have 3 factories in Malaysia, one at the northern side in Taiping, one central in Nilai, Negeri Sembilan, and one to cover the southern region, which is in Bandar Tenggara, Johor. So the Bandar Tenggara, Johor factory also exports to the Singapore market, which we have a dealer in Singapore that they'll because we supply to the HDB flats. So we actually one of the top exporter to Singapore in terms of our hollow core wall. All right. This division has done well in 2022 as well, recording about 37 million revenue on the back of resulting in a 5 million profit. So we reckon that this division will continue to do well in 2023 with the order book that we have as it is now. Hospitality, I won't touch much on hospitality because we now only the group now operates after the very much rationalization that we did over the last 5 to 7 years. As some of you may be aware, we actually have disposed some hotels within the group, and at the end of the day now we only manage 2 hotels, and the other 2 hotels we manage 4 hotels, and the other 2 hotels we actually have outsourced it to the international chain, one to IHG, and we have rebranded that to Holiday Inn Express that is in Johor, and the other is actually in Damai Laut, which we have rebranded. We spent we invested in the refurbishment, and we have rebranded it to DoubleTree by Hilton, and all this refurbishment and rebranding has completed last year, especially on the Damai Laut. We have reopened it in September last year, and I must say that these international brands have actually did very well. We managed to have a GOP even in the first month of operation. So the hotel actually turned around substantially in 2022 from a loss as high as 28 million, as you see in the chart here in 2020, to a slight loss of just 1 million. That is actually a turnaround of close to about 21 million. We were happy with the results of the hotel operations in 2022. So these are our hotel managed by us, which is Genting, Bukit Bintang, as well as Kuantan, and there's one in Malacca as well. And these are the hotels that is managed by the international brands, as I mentioned just now. Okay, Vacation Club, we will not grow as aggressively on this. In fact, we will just continue to service the 8,000 over members that we have across our properties. This is a timeshare. There's no significant impact or contribution to the group, so we'll continue to just provide our services to the members that have purchased the membership for us. These are the assets that the members are entitled to stay based on the membership entitlement. All right, so the key takeaways for OSK Group. Sorry, I need to change. Can I have the last page of the slide? Sorry. Give me a minute. So the key takeaway for OSK Group. Can you see my slide? Let's stop sharing and sorry, I just share again. Okay, good, Kenneth. So the key takeaway for OSK Group is we actually are integrated property and construction. We have an integrated property and construction model, which actually have benefited us along the way. We started this property and construction collaboration in 2016, and this has actually yield result. As I mentioned earlier, we have no projects that is delayed along the way. We have achieved the quality set and or expected by our purchasers, as well as we have delivered uh, homes which is in terms of design and constructability at the most efficient cost, at the most efficient cost. So we would like to brand ourselves as a reputable developer, and with an estimated GDV of about 16.2 billion from our 2,000 over acres of land bank remaining. So that will sustain us for many years to come. And we have a track record of building homes more than 40,000 over the last 30 years. This year we will launch, last year we launched 1.2 billion. Next year we'll be launching about 1.3 billion. That will help, that will sustain us for another 2 years. And what we like to shout about of ourselves is that we have minimal unsold completed stocks, right? And then for the sustainable growth, as I mentioned, we have acquired land bank. We continue to acquire land bank, and our land banks in Malaysia stood and Australia stood at, in total 2,000 hectares. And we will still continue to focus on our Australia project. As we mentioned, we will launch our phase two, comprising about 600 units, and this will take us through for another 2 to 3 years. And we will continue to grow our capital financing portfolio with new products, especially on the civil servant financing and the Islamic financing side, which we reckon there will be a lot of opportunity there. So on the earnings and healthy financial position, as mentioned, we have a gearing of about 0.18% net. Um, we are we are the we we have unbilled sales about 1 billion, and this year we target to sell about 900 million from the launches that or the pipeline projects that we target to launch. Our sales target is about 900 million for this year. Yeah. And again, we look at stable contribution from our capital financing and industry segment. Also, the stable cash flow coming from the dividend that is declared from RHB Bank. Okay, with that, I conclude my presentation. I'll now pass it back to Kenneth. Thank you.
Thank you for the presentation, Lai Ping. We'll now move on to the Q&A session, and I have some questions here from my end. Firstly is, with Bank Negara resuming its monetary tightening policy path, are we seeing demand turning softer for the property market as of late?
Yeah, actually, property market has always, I mean, has been having this type of headwinds for the past 5, 7 years, right? So at first we are embroiled with all the overhang properties, and now high interest rate and then rising material costs. If you look at it, actually, by right, the property price should go up to cover the increased construction costs. Unfortunately, it would affect the affordability as well, because as you know, we play in the affordable segment. Our product ranges are below a million, mostly. Yeah. And definitely the rising interest costs will affect the affordability. uh, yes, we do see some softening, but it's not alarming. You can see the take-up rate from the projects that we have are still moving. It's about packaging as well as the reputation of the developer as well. And I think we have to be cautious at this point in time with the financial, the macroeconomy situation as well as the global situation. Buying a property from a reputable developer will be a lower risk for the purchasers, in case of collapse of a developer or whatsoever. So yes, it is affect is this anticipated to affect the take-up rate? But definitely, but of course, location play and all this is something to take into consideration as well. There's still demand, but yeah, people are more cautious in terms of making decision.
All right. With building material prices remain elevated in
Mm.
recent times, particularly like cement prices, will OSK be revising their selling prices for future phases of launches, like from the ongoing two townships?
Yeah, it's slowly creeping up. We need to revise the price to cover some of these increased material prices. Definitely, yeah, we do have some slight creep up in terms of selling price.
Okay.
Mm.
And with Australian market also facing a high interest rate and environment at current juncture, and
Mm.
also housing availability slipping further out of reach for many,
Mm.
will OSK participate in the build to rent scheme for future launches?
Actually, we do have one more parcel. Definitely, we are open for all these different ideas and different schemes. But for now, we will still we still have three parcels in the Melbourne Square development. We have completed one. We are launching the second one. We have just launched the second one now, and we have three more other parcels. Actually, in total, there are five parcels of land in Melbourne Square. So definitely, this the balance parcel will give us opportunity to look at different products. We'll definitely explore all these things. But now, for now, we'll be focusing on our phase two launch lah. Yeah.
Okay.
The Australia scenario will be slightly different from Malaysia because in Malaysia is progressive billing, right?
Yeah.
Australia is settlement only upon completion of the property. So that means the purchaser pay 10%, the 90% is settled only upon completion of property. And the completion of property, say for example, for this phase two, is going to complete only like in 3 years' time.
Okay.
So, as you're aware, a lot of banks and the central banks are looking into even cutting rate starting from next year.
Yeah.
So, whoever that make a decision today will be looking at a 3 years horizon in terms of the interest cost rather than now. So no commitment in terms of interest costs or any payment until 3 years later. And the market is actually right for us now to launch this because based on the data available, there will be a supply squeeze in the coming 2 to 3 years. The supply coming into the market, the Melbourne market especially, will come down substantially in the next 2 to 3 years. And also, as it is now, there's also a shortage in terms of apartment to rent, right? Because nobody has, or very few development has proceeded during the COVID year, and there's actually very strong migration into Australia now. So there's actually a shortage in terms of supply as we speak today, and the rental has gone up about 15 to 20% over the last 6 months in Australia
Okay.
or in Melbourne in particular. Yeah.
Okay. So and that means that we may expect like a lumpy earnings for the in like 3 years later from the contribution
Yeah,
from our brand.
definitely. Because Australia, we can only recognize the profit when um, completed or when settled lah. Yeah,
Okay.
I can't even mention how much progressively profit I will recognize because I have uncertainty whether the person will settle in 3 years down the road. Just like what happened to us in our first phase. During the settlement, we are smack in the COVID year, right? In year 2020, when we handed over the first phase. So when we settle, there might be other challenges that came or surfaced that may affect our settlement. So I can't even confidently tell you that this will settle, but we will have to take it based on the market that we know today. It's likely that we will be able to recognize this upon settlement, and of course to face whatever challenges that we need to face in 3 years down the road. But that's the risk of doing a development in Australia.
Okay. We understand that the equity stake in RHB has been a rising trend due to the dividend reinvestment plan.
Mm.
With a healthy balance sheet and a strong cash pile of about 700 million at the end of last year, is OSK looking to increase their stake in RHB anytime in near future?
Um, Answer is no. We will continue to participate in their DRP if there are any, but we won't go to the market and buy additional stake. We will continue to keep the stake. I mean, in the foreseeable future, as a strategic investment. Yeah, no
Okay.
intention at this point in time. Yeah.
I have one more question from me. The hospitality segment has returned to the black in the last quarter. Following the reopening of China borders, can we expect
Hmm.
better performances for the this segment in this year?
Actually, even before COVID, our hotels and our resorts destination has not many foreign tourists.
Okay.
We hope that DoubleTree by Hilton will be able to make some differences. But so far, since our opening in September till now, we have not seen much tourists from overseas. Maybe about 15% of the total guests that we take in are actually foreigners, but mostly are still local travelers. We hope that these international brands will be able to make some difference, but we have yet to see the results yet at this point in time. Yeah, we will monitor that.
There's one question here from the audience.
Hmm.
Besides Malaysia and Australia, is there any other like international market that OSK is looking to venture into for their property segment?
No, no. At this point in time, we will focus in Australia. As you see that we have actually acquired additional land bank in Australia, our focus will still be in Australia for now. Yeah.
Yeah, I can see that the land bank is still quite sizable in especially in
Oh
Malaysia
yeah,
at
I
2,000
mean
acres. So
at
I think that
seven
will
thousand eight hundred square meter, in any relative terms, is actually huge. Yeah, for
yeah.
Australia development. Yeah.
Okay.
Mm.
I think that's all for today's corporate briefing. To
Okay.
understand more about OSK, we have several research reports uploaded at our and Bursa Malaysia website. And our last recommendation on OSK was a buy with a target price of 141 cents. Thank you and see you. Goodbye.
Okay. Thank you, everyone. Thanks for your time.